All right. Welcome, ladies and gentlemen, to this special edition of Cliff's Notes. And we're here to give you the tips, tricks, and tactics to explode your business. And today we have a very special guest, a dear friend of mine, Mitch Ginsburg, founder and CEO of CommLoan out there in Scottsdale, Arizona. And Mitch, I am super excited to have you on this special edition of Cliff's Notes. Welcome to the show.
Thanks, Cliff. And once again, always excited to be on your show and always excited to chat with you.
Well, I don't do special editions very often, but I think we've got some really key information that we want to get out. And I've been working with you a little bit, kind of behind the scenes to help you with your effort to get CommLoan out into the hands of commercial mortgage loan originators. And it's been a while since we've talked on the show, but since then, I've attended a couple of road shows that CommLoan has put on. One here in Dallas, and then more recently in Phoenix. And my gosh, we have had just a tremendous response from the universe of loan officers in those two areas. Were you surprised at all at how much interest was shown there?
Absolutely. I was extremely surprised and obviously very pleasantly surprised. Just a great response. I mean, I think overall this platform has been accepted with a level of enthusiasm and excitement that certainly I didn't predict. I knew that it would be a win, but really, this level of early adoption has just been outstanding. The energy at the meetings, the attendance, it's just been phenomenal. It's been great.
Well, and we've talked about this before, but this is sort of a really a perfect storm for CommLoan, with the Fed doing crazy things with interest rates that have had a number of probably unintended consequences. One is we're talking to a lot of commercial loan officers at banks, and they are just at a loss because their banks are starting to pull some of their products. They're tightening up on their underwriting. What do you have to say? What's the message you have for those loan officers who are in that situation at a regional bank right now, Mitch?
Yeah, it's really tough for them because essentially they make their living from originating loans, and if the bank's not funding loans, they're not originating loans. So it's a very, very difficult position to be put in, and a lot of banks are tightening up. They're concerned what their existing portfolio looks like, how that's going to perform in coming months. So they're trying to sit on as much liquidity as they can. And that puts those loan originators in a very difficult spot. And what we found is CommLoan is just such a huge lifeline for these guys, because all of a sudden a lot of them have been in the business for a fair amount of time, have a book of business, have a potential client base. And CommLoan gives them really a vehicle to monetize that and to be able to get back in the game, and not just to survive, but actually to do well. And the benefit of CommLoan is by having the 700 plus lenders on our platform, and the technology really being up to date, and knowing who's lending at any given period, at any time, at any point in time, is so critical in this environment, and is such an advantage for any originator on the platform. So yeah, we've been very surprised as to the number of bank loan officers that are wanting to come onto the platform, and then even traditional loan officers that are working for brokers or other mortgage companies. It's tough to know who's lending, and on a manual basis, it's impossible. Just to keep dialing. I mean, how do you know? It's so widespread. So, I think you said it is the perfect storm. The timing, I wish I could say it was genius on my part or on our part. I think it's just somebody, we had a guardian angel on our shoulder, but it's just perfect timing to open up this kind of technology and this kind of access to lenders, to originators at this point in time.
And the other thing is that in the past, those loan officers who chose to work for banks probably chose them for the security of the big name, the brand, benefits, and all of that sort of thing. But the reality is there's not a lot of security left. I mean, and what you've done in developing the value stack for loan officers at CommLoan includes the certain benefits that heretofore had not been available to many loan officers, including health insurance. And we spoke briefly about that recently, Mitch, and you will be in a position to make a health insurance available to loan officers. And even, just the ability for them to grow. And I know some of the conversations we've had recently, including yesterday, it was really incredible to see the look in the fella's eyes when it came to the talking about building a legacy, building generational wealth, and doing something meaningful. I think we've all got a little bit of that desire to go out and create something to put our dent in the universe. And this is really the place for anybody who's got an inkling to want to do something at that level, right?
Oh, absolutely. So what we've really created is given somebody a very structured, secure environment to still have that entrepreneurial spirit. So we're giving them all the ingredients and they can go out and build it themselves. But at least we're giving them the ingredients, which is really, sort of giving them that additional step and that additional push. So I think it's for anybody that truly wants to be the master of their own destiny, to be able to take a piece of that American dream and build something special. We're giving them the perfect vehicle to do that. And that's what's exciting. They just sort of plug in and their level of success is going to depend on the level of effort and dedication they put into it. And that's very, very exciting for a lot of people.
Yeah, the ability to build a business rather than just rent your career. You mentioned
Exactly.
excitement, and you and I are both just giddy. We're so excited right now because of the reception that we've had in the LO community. That you actually went back, sharpened your pencil, and reworked some numbers. And I know your background is accounting and finance, and so you typically always, in everything that we talk about, you take the very conservative approach toward projections and that sort of thing. But even you had to go back and revise some of the projections based on what we're seeing in terms of deal flow that's onboarding right now. Can we go ahead and just step in and talk a little bit about that, Mitch?
Absolutely. So pre-launch, I think once again, coming from an accounting background, and you always sort of try and take a very conservative approach. And I think initially I was figuring that maybe on average we would end up at about 30-40 loan originators for the year for 2023 for this current year. But essentially we're at over 30 applications within the first month. Which obviously is staggering and very exciting. So I went back to our deck and took a look at some of our projections, and we were just so way off. And I said, all right, obviously looking at 30 a month, that's without any of the exponential growth effect of revenue share, where loan originators are going to be recruiting other loan originators, which certainly over the next 6 months and certainly over the next 18 months will very much be the case, because that's where a lot of the exponential growth has come. This has literally been almost organically and just through our own internal efforts. So I said, all right, let's be really conservative. If we were able to achieve this just by ourselves, certainly we're going to be able to achieve that on a monthly basis when you take the exponential growth effect of originators recruiting other originators. So I said, all right, what happens if we recruit just 30 originators per month going forward over the next 18 months? And then what happens if we said, a very average producer on commercial real estate would be at about $24 million per year. which is certainly, that's like what, $2 million a month. Take into account that you could get a $24 million transaction in 1 month. So it's a pretty average, lower level commercial originator, from a production point of view. So we're not looking for, a group of superstars on average. We will have some superstars, and we might have a few that are just below that average. But I think it's a very safe average to go with. And then let's say, all right, let's be conservative and say we're not even going to make a full point on every deal, that some of the bigger deals are going to get discounted or whatever the case. So let's work on an average of 75 basis points, so 3/4 of a point on a deal. And then obviously, as we onboarding loan originators, there's probably going to be a 90-day lag between the time we onboarded and their very first transactions are going to start to close. So if you work on that basis, the numbers become absolutely staggering. If you want to look at the next slide, it's just mind-boggling as far as the growth in gross revenue as well as in loan volume, that literally we could be looking at, just enormous gross revenue, probably in the magnitude of, the $60 million plus gross commission revenue, and loan volume, probably, at 8.5 billion or exactly whatever that number is. So just absolute hockey stick growth. And what makes that possible is the absolute rev share model. I mean, that's really what it is. It's that's what is enabling us to get to that level of growth.
So, if we look sort of just talk briefly about the loan level profitability here, this business will scale without having to take on much additional fixed overhead. So really, the contribution margin on a deal is going to be really high. How does that translate into future growth, Mitch? And where do you see things in the future? I'll go ahead and go to the next slide here so we can, talk about some specific numbers. But this, if you look at the growth rather of the EBITDA, now this is the assumptions in the numbers here. This is net of any CapEx, right? Because and if you want to speak a little bit about the development, what the cool things that you're building into the platform right now, but the numbers that people are seeing right now are net of CapEx, and these are really representative more of the free cash flow of the company. Is that correct?
Absolutely. So as you can see, the infrastructure is built. We've already invested several $1 million into the platform. So the platform's up and running. We've got proof of concept and it's working. But there's just so many outstanding features that we can keep adding and enhancing. So I think the one area where I think we are looking to spend some additional dollars is on CapEx, but it's not exorbitant. It's a fraction of the potential free cash flow that's going to come off this thing, certainly over the next 18 months. The beauty is that the loan officer or the external originator model really doesn't attract much fixed overhead at all. I mean, I think, in our projections, we've factored in maybe an additional $1.2 million for 2024 compared to 23, because really there's not an enormous amount of support that's required. The infrastructure is already built, and there could be some just marginal additional support as the loan officer group increases, but there's no massive marketing costs necessary because the rev share model takes care of that and takes care of essentially the recruiting and the growth. So virtually a massive percentage just goes to the bottom line. So the company going forward based on these assumptions and based on these projections will just be spinning off an enormous amount of cash flow, which a fraction of that will go to CapEx, but not a large percentage either, because the platform's built and there's just so many cool little projects you can do and cool additions you can do, but nothing to the extent of the kind of cash flow that's going to be spun off.
Got it. Wow, that's an incredible story there. And I just so if you look at what's ahead, there are headwinds in the lending industry going forward here. I know we've talked many times about the trillions of dollars in refinances that are going to be scheduled to hit here in the not too distant future. We've got multifamily borrowers whose collateral now, the LTVs that they can refi at are different. Not only is CommLoan going to be able to give LOs opportunities for better lender selection, but as you mentioned before we went live here, CommLoan is going to be a place where we're going to be able to come up with creative solutions that are outside of the box that traditional lenders might not even be allowed or aware of, to help some of these folks that are going to be in a bind get through and breathe life into some of these deals that were really DOA because of the rise in interest rates. Without letting the cat out of the bag, Mitch, do you want to talk about how this spirit of collaboration over here at CommLoan is going to be so beneficial to loan officers in terms of idea generation and working with people who are really smart to be able to solve their customers' problems?
Yeah, I think the really exciting part of this is as we add originators and as we add experienced originators, they all come with a wealth of experience and knowledge. And it's almost tapping into that pool of knowledge and experience and of contacts. And collectively as a group, we have so much more power. So no originator essentially is operating as an island. All of a sudden we're able to, really we welcome out of our origination group already, best practices, ideas of, where do you see things going in? And certainly we can't adopt every idea and every suggestion, but certainly there's going to be so much valuable information and so many good ideas that are going to come out of this that we can adopt that'll benefit the collective group. So all of a sudden you now have just this enormous opportunity of being able to pivot to meet the current economic situation. So for example, now, particularly on a lot of, borrowers that might have been on a multifamily and had a shorter bridge term loan that find they're in trouble just because of, rising interest rates and the the ability now for the property to service the debt at a higher interest rate isn't there. So the loan to values are coming back and they're needing additional forms of capital to bridge the gap between what the debt is and what the debt what needs to be paid off. So there's an opportunity for some pref share capital in the capital stack. And these are all areas that we can tap into because of the economies of scale, and to be able to offer this and continually look to enhance. So being a tech company, being nimble, we are able and we're going to be able to react and bring solutions to loan officers essentially that hasn't been possible before.
And the reason why that's happening is because the model that you chose to build here, and that's revenue. We're all held together by revenue share and equity ownership in the company. For those of you who will come to CommLoan from legacy lenders, instead of competing with the people in the next office, you're going to be collaborating with people all over the country here at CommLoan, for the simple reason that this is the Three Musketeers, but it's on steroids. It's literally
Absolutely.
all for one. And so
Yeah.
welcome to the spirit of collaboration. Mitch, is there anything that you would like to add before we close here?
Just other than how excited I am, this is just probably one of the most exciting times, certainly in the history of CommLoan, and it's the most fun I'm having. Just to have this opportunity to be part of something that is going to be life-changing for so many people. It just feels great. It's just a wonderful time to be doing this.
It is certainly an exciting time. And if you're interested in more information, you can reach out to the company. Where's the best place, Mitch, for people who are just watching this and have not spoken to anyone about the company? Where's the best place for them to get some?
They can just go to commloan.com, and to inquire about being a loan originator, they just click on the link and somebody will reach out to them and give them whatever information they need.
That's awesome. Well, Mitch, again, super stoked, super excited. Great to have you on the show again in this special edition. We're going to keep following you and keep doing these special editions as the company just blows away previous projections and continues to go in and just own this market. So thank you again, ladies and gentlemen. Mitch Ginsburg, the CEO,
Thanks.
founder, and visionary of CommLoan. All right. Well, be sure to tune in our regular show on Thursdays at 1 o'clock Central on Cliff's Notes, and we'll see you then. Take care, everybody. Thank you. Thank you, Mitch.
Thanks, Cliff.